Glad to know you stay with us. The EIU's Financial Services Outlook 2025 anticipates a global shift towards easing monetary policy as central banks, after a period of aggressive rate hikes to combat inflation, begin to cut interest rates. While the pace of these cuts will vary across regions, the overall trend will be a decline in borrowing costs, impacting financial markets and the broader economy. For more insight on this, I am joined by Oladipo Ajayi, Head Fixed Income and Forex, Chapel Hill Denham Securities. Thank you so much for joining me today, Ms. Ajayi.
Good morning. Thank you very much, Professor, for having me this morning.
That's great. Now, the EIU's Financial Services Outlook 2025, titled The Great Easing, which was released recently, sort of outlines a couple of trends for the financial services sector in 2025. Broadly speaking now, what do you make of them?
Well, 2025, just like what the EU has mentioned, is more like a year of easing. And maybe that's one of the reasons why our own budget is also titled Budget of Restoration. Because globally, we're expected to see more like ease across board. Simply means that the impact of the elevated interest rates, the impact that has created on the global economy will actually ease down more in the year 2025. So it simply means that people that are actually exposed to mortgage loans, they can now actually refinance at a lower interest rate, and also means that the cost of borrowing to come in 25. So basically, what this will mean is that is an environment where interest rates will be more at a lower level. Just imagine an environment like in the United States where interest rate was at 0.5 at the point in time, and the same interest rate went as high as over 5 point something percent. So it tells you what that could have done to an economy. And what the EIC is actually mentioning, saying this particular point in time, is that year 2025 is just going to be opposite of what we have seen post-COVID. So it simply means that it's going to be a time where people can consume at a lower rate, people can borrow at a lower rate, and also the investment environment. It also means that we'll see more of influx of fund into more like emerging market as a result of low interest return in developed economy. So basically, it's going to be more like a year where interest rate will be the key call for that for 2025.
Well, I'm guessing Nigeria should get ready for the inflow, right? Well, apart from that, let's look at the first on the list, talking about falling interest rates eating into bank margins. Now, this is us disaggregating, what you just talked about now. Does this apply in Nigeria? Are we going to see interest rates fall in Nigeria, looking at, where inflation is at the moment, or is this just about developed economies?
Well, Perfection, we can't continue to hike interest rates in Nigeria because it gets to a level that why it will make the monetary policy too impotent. And so, yes, 2025, I think it's going to be a year where we'll see more rate cut than rate hike for me. And,
so you're anticipating cuts in 2025?
The president actually presented.
Let me come in here, please. You said you're anticipating cuts.
Yes, I am. I'm actually expecting.
Oh, interesting. So, I mean, what's the mathematics here? What will be the metrics?
Rate cuts in year 2025.
Yeah, go ahead. I mean, what are the factors that will necessitate that?
The fact that if you look at the budget, I said when you look at the budget that was presented by the president, the expectation for next year is that interest rates will actually drop. Inflation will drop as low as 15%. Of course, for me, I think that is extremely very bullish. I don't think we'll actually be able to hit 15% in year 2025. But when you look at it overall, I think it's a year where inflation will actually drop. We'll enjoy this year effect. And also, if you look at information coming from most of the governors from the northern part of the country, I can remember vividly the governor of Borno State, Zulum, also make reference to the fact that year 2024, was a very great year in terms of harvest for them. So we feel that that will also impact food inflation one way or the other. And also, the government on their part are actually they are currently more aggressive in terms of securing the lives of farmers in most food producing states. So we expect this also to also affect food inflation. So when you look at it all together, it means that at a particular point in here, which I feel by Q2, we'll start seeing more like inflation figure actually reversing. And at that point, you expect to now start seeing the monetary policy becoming more less aggressive and more dovish. So by at latest, I feel by Q4, we'll start seeing more like rate cut on the part of the monetary policy guys. And I will expect to see more like them retaining for major parts of next year. But I think we'll see one or two rate cuts in the year 2025.
Well, Q4 2025, that's still, I mean, that's far away if you ask me. But I mean, back to what we were talking about, I know I have always talked about the impact falling interest rates could have on banks' margins, but not so many people think this would be a big deal or a challenge here in Nigeria, especially as banks are also beginning to expand their non-interest income component. Well, I'd like to get your thoughts on this.
But just that the impact will not be massive because Nigerian banks, they move more from interest income into other forms of income. We've seen, if you check their balance sheets, you've seen foreign exchange income, you have seen other sorts of incomes to bank than net interest margin. So, of course, net interest margin will actually drop in the year 2025. But when you look at it overall, it won't be as great as what would have actually happened in more like developed economy. Developed economy, what they focused on is more like core banking, and they thrive more on interest margin. And but when you look at Nigerian client, we are not so much exposed to that. Nigerian banks have been able to actually diversify their income generating capacity from other sources, and that has actually helped to actually pushing the effects of interest margin when we tend to see more like aggressive drop in interest margin. So for 2025, I don't think they will be aggressively affected, but notwithstanding, it will actually affect their income, but not as much as we would have expected to see compared with what we see in developed nations.
Well, talking about developed nations, I would like you to, tell us more about what the impact of this will be on the banking sector.
Well, from banking, most of these guys, what they thrive on is interest margins. You get deposits, you actually extend to people across board. You have pockets of products, mortgage, insurance, and many other things. So where you thrive from is actually investing some of these funds in government security, in interest bearing instruments. And also when interest bearing instruments, we start seeing aggressive drop in your investment destination. Of course, at the same time, you're also seeing that on the part of risk asset that you are also creating, you tend to actually see more aggressive drop in interest rate. So at the end of the day, what this will also mean is that the return you are getting from securities and what you are actually getting as a result of maybe deposit or funds that you're actually raising, or your cost of capital per se, you see more like a aggressive trim down in this investment spread, and this will actually affect their balance sheet and also their P&L aggressively, and that will be more like the talk of the town in the year 2025. Let's take, for example, at the time you tend to see return on 10-year treasury in the US as low as 1%, 1.5%. And imagine you getting to that same levels now. It simply means that return on some of these investments will actually drop aggressively. And also when you now want to actually take whatever spread you actually make it, when you compare your cost of capital to the return on investment, it will actually drop aggressively. And this will actually impact their books And so that is exactly what will happen more for most of these banks in the developed nation in the year 2025. And I think most of them also will start looking at a way to actually mitigate this by also looking at avenue to actually invest funds or create products that can actually give them better return. And but don't also forget that banking system in developed nation, they are more like they are not actually created to actually take aggressive risk. So as a result of that, the return, the capacity to take result and earn more return will not be that. So they will actually want to be more conservative, and that will actually drop their expected return aggressively.
Well, there's a lot to unpack from this report from EIU, but I'd like you to stay on the line, yes, while I also connect with my colleague, Amadine Uyi, Bureau Chief from Abuja, of course, who is giving us update from the streets, telling us what's happening today. Hello, Amadine, can you hear me?
Perpetua, I can hear you loud and clear.
Wow, this is interesting. I feel like being right there with you. Tell us what's happening over there. Amadine, can you hear me?
Yes, Perpetua, I can hear you loud and clear.
All right, so talk to us. What's happening over there? Where are you?
Okay, I'm still within the premises of the Transforming Church, and we came to cover the Christmas service. But it is ideal we get feelers from a lot of the Christians who are coming to celebrate the Christmas holiday. So beside me is Jane Obende. Jane, how do you do?
I'm doing fine, sir.
Okay, Jane, what's it been like celebrating, visiting the market under the current harsh realities of the Christmas celebration?
It's been really, 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 really. In fact, you're spending even triple of what you spent last year. Like, it's not even funny. I was in the market yesterday, and the cost of things are really, really, really high. And in fact, I'm just wondering how people are actually going to be able to celebrate Christmas this year.
No, but I earlier saw you. You are all smiles. It seems the hardship is not dampening the Christmas celebration for you, or is it just for you?
Not really. We just have to be, you just have to be up and doing because God has been faithful, really. And as Christians, we are meant to actually speak positive things because God has actually been faithful to us, keeping us seeing Christmas is worth celebrating. With the little we have, we are just celebrating as we can.
Now, you said you were at the market yesterday. What's like the difference in prices compared to maybe this time last year?
Man, the difference in prices are really, really high. I got chicken yesterday and I got it for 20,000 naira. Comparing it to last year when I got it less than 8K. So it's just even more than double the price. So even our rice, our groundnut oil, everything is just on the high side, and it's just you just have to buy the few you can and manage and do something, make something good out of it. But it's Christmas, so we have to celebrate and merry.
Like you said, it's Christmas. What's the plan for the celebration when you leave church?
Well, before coming to church, I had to prepare my Christmas rice and give out to my loved ones and give out to. That's how I celebrate my Christmas. I give out to my workers, my security, people around me. I did that before coming to church this morning, so I had to make my own delicacy. Celebrate.
You heard it loud from Jane Obende. Jane says it's been tough going to the market, trying to cope with the harsh realities, especially the harsh economic realities. The cost of goods and services have more than doubled. Some say more than tripled. But in all, she still has to celebrate the Christmas, the Yuletide season at the Christmas day.
Absolutely. Well, Amadine, you said you're in a church, but I can see people wearing hijabs. What's happening over there behind you?
Okay, let's just go. Be well, can you come with me? Sorry, we have to. Let me just go. Remember, for a lot of churches like this, Christmas Day is also a time to share. So you see, there are a lot of goodies to go around, bags of rice, groundnut oil, clothing for people. So it's open. And what happening is that beyond holding a Christmas Day service, look behind me, there is a long line. If you go behind the church, you see a lot of goodies, like I said. They are sharing to a lot of people. They've invited not only church members, but people from the neighboring communities, Christians and Muslims from all other religions, they've invited them to come and partake of whatever they are sharing for residents and people around this vicinity for the Christmas Day celebration. Be well, you can establish those shots. So just look at the shots. You see a lot of them. A lot of them are around, and they are going to benefit from whatever the church is going to share to those in need. It's a period of just sharing love. They don't want it to be only in words, but also in practical terms.
Right.
So a lot of them who have come here, many are not even church members. They are going to go back home, maybe with a half bag of rice, granite oil, or whatever they can use to celebrate the Christmas celebration, Pep.
All right, I think it's okay to point out that I like what I'm saying, especially because we do not have an uncontrollable crowd, because that would be another issue. I mean, this is good. Thank you so much, and I hope you're having a wonderful celebration after now.
Thank you, Perpetual.
All right. Thank you so much, Amadine, right there from Abuja, telling us and showing us what's happening on the street. And of course, the church celebrating. And I'm super excited that we do not have a crowd in that church, because Nigeria has been through a lot in the past few days, and we do not want to hear another story making the headline. Congratulations to every one of them over there, and of course, happy celebrations to them. And now, of course, this is still Business Edge, and I have Oladipo Ajayi, who is standing by. Thank you so much for staying with me, Mr. Ajayi. If you can hear me, Mr. Ajayi, I'd like you to please, can you hear me, sir?
I can hear you.
All
yeah,
right.
I can hear you clearly.
Great. We're looking at, the EIU report. And one other thing they also mentioned is that there will be a bond market rally. I'd like to get your thoughts on that.
Well, truly, we expect bond market rally. And, currently yields are at elevated levels. And so when yields are high, price and yield, they are inversely related. So it means that the prices are very low as we speak currently. So as interest rates continue to go down, it means that you expect yield to drop and prices will begin to actually inch upward. And just like what is obtainable in any other asset class, as you continue to see prices up, you expect to see more participation in that particular asset class. And that's exactly what they mean by we expect to see rally. So what it simply means that as interest rates continue to actually move downward, you expect prices of fixed income instruments to continue to go up. So and as prices are going up, you continue to see more participation from different classes of investors. And that's one of the reasons why they actually mentioned that you expect to see bond rally. Also, this is not peculiar to developed markets. We also expect to see the impact also in our own domestic market here in Nigeria. You expect to see more like a spillover of whatever is happening in the developed nations in our market. So as interest rates continue to go up and yield continue to drop, it gets to a level that yield become will not be so much attractive in developed nations. You will now start seeing most of these portfolio managers shopping for alpha across board. And that particular point in time is when you tend to see more aggressive inflow of funds into emerging markets such as Nigeria and other African nations. And when you continue to see more of these funds in our own markets, what will happen is that rates will also drop in our own markets and prices will also go up. And so we'll also see the effect of what is happening in developed nations also replicating itself in our market. So 2025, we expect yield to also drop in Nigerian market, and we expect prices to also go up in the bond markets.
All right, there is this about rate cuts in 2025, especially in developed markets, propelling bond flows to emerging markets. But I guess this will not be a given. I feel that each country will have to show workings for it to be able to attract investors. What do you think, and what's Nigeria's chance here?
Sincerely speaking, Nigeria has already done all the working. Nigeria is ready for these funds to actually come into our market. Perpetual post-COVID, Nigeria lost a lot of funds, and because most of these guys, they left around COVID. And we didn't also see them coming into our market until sometime last year, after the harmonization of our exchange window. So it means that for like 3 years, we were staff of FPI funds coming into our market. But as we speak currently, I guess Nigeria is currently ready. When you look at our monetary policies, I think it's actually very encouraging because it actually speaks to what is expected of a nation that actually expects influx of funds into our economy. And when you look at the BMAT window, FX window, it's also a pointer to the fact that foreign investors can actually see what is happening in our FX market. What that has brought to the table is more like transparency, price discovery, and also show the depth of market. And these are some of the things that can actually lure any investors into our market. So when you look at FPI funds, I think Nigeria is double ready for some of these funds to actually come into our market. When you look at our reserve as well, when you look at the gross reserve, we are not of 42 billion currently, and also it's actually will give most of these guys confidence to actually want to come to our market, knowing fully well that the reserve is actually improving and look robust enough to actually absorb any shock within this time.
All right, just before we go, I know you must have mentioned one or two of this, but let me just say it. What's your outlook for the fixed income and equities market in Nigeria? Maybe you start with the equities market.
Well, for me, equity market, I think it's going to be a very good year for consumer names. And my view is premised on stability of FX. Because if you look at most of these consumer names, what they've actually suffered of in the last 2 years is basically the volatility of FX. And we have seen them actually post huge FX loss. But with the level of stability we are seeing in FX, I think it will actually help most of these consumer names. And we have seen some of them actually improving in the last months. We've seen even in the brewery sector, we've seen international breweries, Nigerian breweries, even in the consumer names, we've seen Nestle. We've seen some of these companies actually performing better. And also, when you look at also in the insurance sector as well, with the recapitalization of stuff going on, also this has been approved by the House, and the implementation is expected to commence in year 2025. And we also feel that this will also further develop the insurance sector and also bring a lot of investment into that segment. The banking sector is always available at any particular point in time, and most of them, they're actually currently underpriced. When you look at their price to book and compare that with what their peers are doing.
All right, we need to wrap up now, maybe in 10
Africa,
seconds.
So we'll see that they are performing very well. So the equity market will present a lot of opportunity for investors next year. Also,
right.
the fixed income market,
we need to go, I'm afraid. We'll have this conversation some other time. We need to go. Thank you so much, Oladipo Ajayi, Head Fixed Income and Forex, Chapel Hill Denham. And Merry Christmas to you. Let me call you Pastor Ajayi today because you are a pastor. Merry Christmas, Pastor Ajayi.
Thank you. Thank you very much, Perpetua. Thank you very much for having me on.
All right. Bye, sir. But that's it on this edition of Business Edge. You can follow us on social media. We are at News Central TV. You can also head on to our website, www.newscentral.africa. You can download our mobile app on Play Store and App Store. Till next time, I am Perpetua Fasamipita. Merry Christmas. Bye.